Dean Taylor.
How you doing, Carl?
Thanks for joining me on a morning drive.
No problem.
We're gonna go grab a coffee, and it is absolutely gorgeous here in Vancouver.
It is
right now.
very nice.
Yes.
We're very fortunate.
All right, so Dean, how many shares are outstanding right now, fully diluted?
There's fully diluted about 135 million, so 128 million issued and outstanding, and then fully diluted we're about 135, I believe, somewhere in there.
Okay, so that's not bad for a mining company. How
No.
would you describe the company? Would you say it's an exploration development story? I mean,
Well, no, we're more really we're a production focused company. So we're not really, any exploration we do would just be expansion of assets that we buy.
Okay.
What we typically look for, we have a strategic alliance with Tiffany's.
Right.
And so really the supplies of diamonds in the world are they're constricting. There's a lot of mine closures, a lot of different stuff. So everybody's looking for new sources, especially of gem quality diamonds. So what we do is we acquire non-core assets from majors like De Beers, stuff that's maybe great project, but just a little too small for them.
Yeah.
And we take those and advance them through into production. And then obviously any exploration we do, like the project we're doing right now, there's a tremendous upside in terms of the amount of the area that hasn't been dealt with. So we kind of focus on production first, and then more or less expansion rather than sort of exploration.
so if you're a production mining, producer, then 135 million shares outstanding, fully diluted, is not really that big of a deal.
No, it takes a long time. It takes a long time, a lot of money. We've probably spent, there's a bit of a disconnect in the junior space right now in terms of market cap and what projects are worth. We've probably spent close to, we've probably raised, say, $45 million, and we've sold 200,000 diamonds for another 45 million US. So we're probably, somewhere between 90 and 100 million dollars into this thing. So there's a bit of a disconnect and undervaluation, but it's at a stage right now where we're ramping up. It'll become profitable, and sort of the old saying of price comes to value will hold true. So we expect the stock will react accordingly in the next quarters as we get things ramped up and moving.
So if I'm looking at a pie chart right now, how much, say, does institutions own of the stock right now?
Probably about 15%. Insiders and management have a large position. We own just under 40%, so
Okay.
38%.
Right.
And the rest is kind of smatterings. We have had mostly the same shareholders for a long, long time. We have a really, really good shareholder base. They have their positions. They're quite happy to sort of wait it out. I mean, we always see a little bit of fatigue. These, like I say, you're always going to deal with whether it's COVID or permitting or all the different kind of things that go along with getting a mine up and running. So, that factors into it. But
Okay. And what was the last financing? When was it, and what was the market cap of that financing?
it would have been, what we did was during COVID, we literally had about 3 or 4 days to shut the mine down. Which was virtually impossible. Obviously, COVID lasted a lot longer than we wanted.
Yeah. Not a week or two?
No, no, that's for sure. And so we did about $3.5 million. And what it was basically we had pretty much 100% uptake from our shareholder base. We raised about $3.5 million. Obviously, the price was depressed.
Yeah.
But
they increased their.
They basically I think we had one guy out of basically that wasn't able to do it, but the other shareholders proportionally kept their shareholdings exactly the same, and between management and insiders and everybody else, we put the money together. So really it changed the share structure, but it didn't really change the shareholdings, which was nice.
Any overhang in the stock at all, or?
Not really. We saw a little bit. South Africa has had some power issues. That's held us back probably the last couple of quarters. But we've announced that we've got a battery energy storage system that we hope to have in by the end of the quarter, and 2 new big gensets from Caterpillar.
Okay.
And so that'll give us full independence of any kind of power issues. We're co-located with De Beers' big $4.5 billion Venetia mine. And so really the key with the power is we just need to be independent of it, and so that's going to happen in the very short term, and that'll solve that problem.
Thanks for inviting me up here.
No worries.
Beautiful scenery, obviously, and
Yeah.
the audience can tell it's just gorgeous up here.
Yeah, it's great.
So how did you get involved in the company? Take me back to the very beginning.
Well, my background was mostly entrepreneurial. Had different businesses that I had, sold those off. And some guys approached me about either investing or raising capital for a diamond mine. My background was mostly telecom. I said, no, I'm not interested in it. And they kind of enticed me with a trip to South Africa to have a look at things.
Yeah.
And when I went there, I met with De Beers and very quickly realized that they were going to be divesting certain things, and realized, hey, there's going to be a shortage of rough diamonds, and kind of one thing led to another, and eventually we ended up, getting involved in buying, taking over the company. So.
How long ago was that?
Probably 15 years. It's got to be.
15 years.
Yeah.
So how have things changed over the 15
Well, they
years?
had a smaller deal to begin with that wasn't really conducive. It didn't have the growth potential for a public company. Then we set out to acquire when De Beers was going to go and do an IPO in London. And the bankers at that time had deemed what properties of theirs were tier one, which were non-core, that type of stuff. And so we knew there was going to be some projects that were going to come up that were very attractive.
Yeah.
So we entered into a competitive process, and we're lucky enough to get Kronendorf at Venetia. And of course, Venetia's really the kind of like the third largest in the world. I mean, it's 65% gem quality. I mean, De Beers has about $4.5 billion. I think they spent about $2.5 billion on the open pit, and they've just spent another $2 billion to go underground there,
right,
to extend it out to 2046. And we very much are co-located. Our plant and stuff is, 500 meters from the center of the pipe. The two land positions we have are very large. It's about just under 6,000 hectares. I think it's 5,833 hectares or something like that for the two properties. And what happened was De Beers had determined about 1,000 vertical meters of that pipe was shifted off in a glacial event and then subsequent erosion. And all that material, the direction of it is through our property. So we end up with a surface mine. We don't have to go underground. We don't have to do blasting, very low cost. Same diamonds, just displaced and spread out through the property. So what we do is we drill, we do bulk sampling, 3D modeling and stuff, and we follow the channels on that. Now, we know at 1,000 sort of meters, the pipe of Venetia is about 100 carats per 100 ton. We know that material represent roughly about 50 million tons. So we know that the displacement, was probably somewhere in the neighborhood as much as potentially, let's say, 50 million carats. And so we're never going to find 50 million carats, but if we can locate and mine out 5 to 10 million of those carats, that's between $1 billion and $2 billion in gross revenue, potential that's there. And the operating costs and things we target, we're targeting an operating cost of somewhere under $5 a ton all in with G&A and everything else, and revenues from sort of about 12 to 15. So it's a low cost way to get at those particular stones. And it's something that's very attractive because it is the same as Venetia, 60-65% gem or near gem, really exceptional stones. We've recovered a couple of $100,000 in the trial mining exercises to date. We just under $200 a carat average. The worldwide average for diamonds is about 100. So we're about double that, and that's a testament to the quality. And then we get big stones. The largest that Venetia's got is about 315. Our largest out of the testing of the 200,000 carats is 91.7. But we get a lot of stones, and those can be, it's ironic in that when you hit these bigger stones, They can be $1 million, they can be $5 million, they could be $15 million. And so when you look at a market cap like we have of sub 20 million and a spend of 90 million to get it up to where it is today, it's a bit of a disconnect. But I think that's a function of the time it takes. It takes a long time, and I think that once you get it up and running, and the old saying, like I said, price comes to value. So that's our goal now in the next couple of quarters, is to get to there.
A lot of questions that would come from that. One thing that I have to ask you is, some of these diamonds are pretty big.
Yeah.
So what does the company do? Like the people that are working there, right?
Yeah.
How do you stay away from theft?
Theft is kind of a, look, in the diamond business, it starts, there's multi-layers that we use in terms of security, from outside sources to, looking at, entrance points to everything. Once you get into the mine, the areas that you would refer to as final recovery, or some people will call them red zones or whatever, they're very limited. The amount of people that are in there. They're monitored, 24/7, high def cameras, off screen. Even when the material is sorted, or when the material comes out where you would find the diamonds, it's more or less like a medical facility, where you have glove boxes that you go into, you look through a glass thing, it's dropped into a secure deal. And then we use different methods, like helicopter or airplane. We have a paved landing strip that we share with that we can use right there. That stuff gets taken out typically by Brinks. It's random times. There's just a lot of different ways that you protect against it. You have to watch everything very, very closely, but it's more or less an established system. It's been going on for a long, long time. Mm-hmm. There's pretty stringent legal there as well. Given the big history of diamonds in South Africa, there's a lot of, it's quite strict in terms of if you get caught with rough and, stolen product, things like that. There's actually diamond police, but yeah, it's a system, and that's just the way it works.
So is this the place to mine for diamonds in the world?
Well, I think if you look at the most, Botswana, which is just north, there's big mines. There's, the two biggest, the De Beers has Juanang and Arapa up there. Lucara's there. Our property's only about probably 50, 60 miles from the border. So that's a very, very popular area. Russia is huge. Obviously, that's probably 30% of the market, and we can talk about that.
Yeah, we should talk about that.
Yeah.
Okay.
So that's it. Canada used to be, one of the big producers too, with Akati Diavik. They had Victor. There was Stornoway that came on that didn't work out. There's been a number of deals, but all these mines in different areas. Australia, was a big producer of, at Argyle of colored stones, of yellows, of pinks. That mine's now done. A lot of these mines, Akati Diavik, are at the end of their life, and this is what we look at. The world eats about 135 million carats of diamonds a year, and we're losing, big mines. And if we went out, you and me, tomorrow, and found the next big mine, I mean, at its peak, Venetia was doing 9 million carats a year, so like 750,000 carats a month. That's a huge mine. And if we went out tomorrow and found the next one, it's probably going to take us at least 15 years to get it up and running.
Right.
And we might get 10 million carats out of it. So it's not going to, we're going to get to a point here very quickly where natural diamonds are going to become more and more and more rare, more valuable. No matter what synthetics do or whatever supplement there is, it's like art. It's like, it's like a Louis Vuitton purse or anything else. It's a store of value, and they're extremely rare.
Yeah.
So,
When did synthetics start?
Long time ago. De Beers and different groups have been playing around with synthetic diamonds or lab-created diamonds for a long time. As
an alternative option.
Yeah, I think I mean, they used to use HPHT, high pressure, high temperature stuff. It's now, they're doing different things now to produce it. You take a piece of diamond and use carbon and stuff to create these diamonds. It was sort of, look, they are essentially a diamond. But I think that the thing that's happened, it was really interesting to see. We didn't know we assumed it would have some effect on the bottom end. But largely, I think the consumer in general, when people are looking at, whether it's weddings, engagement, birthdays, all kinds of things, There's still that stigma where you could always go out and buy a cubic zirconia or what. I think it falls into that realm. Now I think as we go forward 5-7 years out, marketing gets better. The rarity of natural diamonds gets real expensive. Then I think it has a place in there. But there's been a lot of guys developing it. De Beers has been involved in it for a long, long time. China's involved in it quite a lot, but it doesn't seem to have really affected anything. In fact, I'm surprised that it hasn't. It kind of actually went backwards rather than forwards. Medical devices, cutting, stuff like that. A lot of it can be used in that too.
Right.
So,
do you want to talk about COVID now and kind of what's happened with Russia and so from COVID to Russia, there's been a lot of things that have.
Yeah, the last number of years has been crazy. We were really in a good spot just before COVID hit. And essentially we had 3 days to shut the mine down. And at the time I was in South Africa, I thought, I'll stick around, get the mine, lots to do. We've only got, maybe a month or something, this will come back, go away. And it was months and months and months. And, so that was a glitch. We were, like I said, we were really doing, getting good things happening and where we are kind of today back then. COVID obviously was a major hit. Our shareholders stepped up, as I said, and we were able to make it through that. The Russia conflict has been an odd one. Obviously, Russia is about 30% of the worldwide diamond market, pretty equal to De Beers, those two. And but now, the sanctions that came into play were really designed to try and reduce that ability for them to raise money for any kind of effort they would with that. I don't think it's been that effective. I think everybody will admit that we've seen in the market a discounted price going to, say, China or India, these places, and then that stuff's still kind of making its way in. There's now stuff that's come out of the G7 where they're going to start tracing it back to the origins. So we may see that kick in. I mean, if you took 30% of the gold or 30% of the oil market, the price would skyrocket. Here, it hasn't really happened yet, but I think due to the natural progression of less natural diamonds coming out, if we really do see the sanctions hit, then I think we're going to see some probably dramatic increases. At least potentially that could be the case here.
Right. South Africa power outages. What solutions have you guys implemented?
Well, we've been there a long time. We've seen load shedding before, not to the levels that it has been in the last couple of quarters. But we'd already been looking at battery energy storage systems that would switch from the power line seamlessly to gen sets and things like that. We felt like it, if we were looking at it 4 months ago, 6 months ago, that would have seemed to have been the logical. You'd be looking at that most of the time. That's something that's underway. We'll definitely, we're trying to get that sorted where we'd like to see it completed or a solution at least by the end of this quarter. But we've kind of come to the point where the gen sets we had, we're just going to put bigger ones in that idle, burn less diesel and stuff like that. And that gives us really what we're looking at now is just, we have to have a solution that's completely independent of any power issues that go on there. Like I say, we're co-located with Venetia. I'm sure they're doing the same thing. And that's something that's very, easy to do. And we just feel like it's going to take them a while to get their, to get the system sorted. So that's what we're going to do is very quickly become independent of that particular scenario.
I'm just thinking, because I do a lot of interviews with uranium companies,
right?
And they have these mini generators, right?
Yeah. Have
you looked at that, or is that
there's a bunch of interesting stuff. I mean, a couple of years ago in Toronto at PDAC, we were approached by the guys at General Electric that were talking about, containerized small nuclear reactors. Right. And I mean, I think it's still a ways off. I'm not sure, but I think it's still a ways off. But I mean, for a lot of different power scenarios like us, it would be phenomenal.
Yeah.
Yeah. I mean, I think it's definitely an up and coming thing. But
So over here we have the presentation.
That
I was sent and I looked over. Let's talk a little bit about the projects, or the site that you that you have.
Cronadora,
Yeah, that's probably obviously you'd say a tier 1.
Well,
It wasn't 15 years ago because it was divested, right?
Yeah, I mean, look, it's a smaller operation. I mean, if you look at, say, like, I guess tier one or true tier one, you're looking at Venetia. I mean, when you start talking about, and this again is sort of the funny part that I think, diamond's not widely followed. People don't really understand it. But if you look at Venetia as, let's say, a $4.5 billion spend and generating 9 million carats a year, you're talking about essentially, let's call it, 20,000 carats a day type of deal.
Right.
I mean, it's massive, and
massive.
it is, and per day. And if you look at the depth and where they go underground, and then you think of that pipe 1,000 meters higher has been pushed off and is spread out. Certainly, that material has gone through our properties, and a portion of it will have gone out.
Yeah.
But that doesn't, we know, and we've seen from the data and the recoveries and the trial mining, we know that there's a good portion of the diamonds there.
Yeah.
So at the end of the day, there's a bit of a disconnect when you look at it, because, like I say, if that total displacement was 50 million carats, and we even find 5 to 10 million, we're $1 billion, $2 billion in gross revenues, and we've already shown. The company, like our company, breaks even on, recoveries of like a couple of thousand carats, 2,500 carats in a month.
Right.
So, we're targeting, a lot higher numbers than that. And, we can be, essentially, we've shown in quarters where, even if we look at last year, through everything that's gone on with, power and all the different issues and everything else that you go through to get this thing to the final stages, we're going to be very close to profitability last year, just on what we sold in very, very limited terms. So the key right now is get independence from this power system, get the thing up and running. I think we're seeing fatigue in the stock just because it takes a long time. And, I always explain to everybody that, it's kind of like you can use a golf course analogy where a guy builds a golf course for a bunch of money. He sells it for half price after he goes broke. Then that guy buys it for half price, and the next guy buys it. And eventually when it goes, it stays. And mining, to me, is like that. You see these peaks and valleys where everybody gets excited and there's buying. And eventually it gets to a point where it almost becomes undervalued, and then it takes off, and then that's where the real inflection or value proposition is. And I think we're really right there. So
yeah, because right now the market cap is 15 million?
Yeah, 15, 20 million. It kind of bops around there.
Yeah.
And I mean, we're no different than anybody, in the space, like in junior mining. It's an area that we kind of see it being a cycle. I think we're due for a run up. But at the end of the day, this is all just about, execution, proving you what you've said is true. And then from there, ultimately you just, once you start making money and things start growing, then the people that are watching and stuff recognize it, and other people come in and stuff like that. So price comes to value. Like I say, it's all execution. It's up to us. We've got a great team, and it's up to us now to demonstrate it.
So if we're talking now to someone who's seeing this in my community, and they've maybe never invested or speculated with a diamond company,
For sure.
And they're looking at this and they go, this sounds interesting.
Yeah.
What would you say would be, over the next year to two, what are your biggest goals?
Well, right now, I think if we look at this quarter, independence of the power system.
Okay.
We're really pretty much there in terms of finalization of everything. Ramping up more tonnage. More tonnage equals obviously more revenues.
Right.
So, the potential to see profitability, big stones, all that stuff. I mean, if you look at this, it's, you're co-located with one of the most prolific diamond mines in the world. You've got, Tiffany Company is a strategic alliance, partner, they're a shareholder. You've got...
You're their shareholder?
They're a shareholder.
What percentage?
Not big. When we did the deal with Tiffany's, they came in at the very beginning and they put up about 10 million in capital to accelerate it, right?
Yeah.
In exchange for that, we gave them a first right of refusal. They don't get a discount or anything. That's not an offtake agreement.
But they get to pick.
They get to pick what they want. Now, their standards are ultra. I mean, believe me, they buy only the best stuff. And the balance of the stuff we sell in Dubai at open tender, and we deal with, we usually have about 180 to 200 buyers. So when you look at this all together, it just really is it's always been a compelling story. It's always really made a lot of sense. But I think that, we're just right now, the biggest thing that's going to change everything is when we actually start to ramp up. And I'm hoping, like I said, that, as we look at things now, we started a drilling bulk sampling. The initial area is about 15% of the property that we did the original 43-101 on. There's about 85% of the property that we haven't done really much. We've done, De Beers did some drilling, we've done some out there, but now we're going on an entire drilling and bulk sampling program out there, because we do believe that the current areas that we've trial mined are just really the beginning of it, that the majority of the deposit probably settled out just more outside the fence and stuff like that. So we've got a tremendous amount of area yet to go, and I think that's potentially a really interesting thing. I mean, if we diamonds like this, when they're displaced, they tend to settle into trap sites. And we know from the 3D modeling and the stuff out there that we've got massive depressions out there. And we've seen, that the indicators show that the gravels are in there. So that's pretty exciting for us, where we see that happening, and again, where we start talking about much higher grades, potentially in those areas, big stones, that type of stuff. So it's going to be an interesting year. Like I say, I think we're on the tail end right now of just preparation of everything. There's certainly a lot of guys in the industry, a lot of bigger guys that are taking interest. Our buyers, the rough buyers, they like the stones, they cut and polish well. They're really, our stuff is always in high demand. They just want us to produce more. That's all.
So what would you say is the biggest risk to a potential new shareholder?
Well, you've always got to look at any mining deal or thing like this where it's non-uniform. You've got to look at, grade, dollar per carat. After a couple 100,000, carats. I mean, you can get a good idea of what diamonds, what a deposit is worth in maybe 5,000 to 10,000 carats. 200,000, you pretty much know that story's already been told. Operating costs would be a risk, but again, you've got a massive amount of trial mining at a large scale, so you pretty much know, you've worked out all the bugs in terms of the processing plants, all that kind of stuff. Things like COVID, I mean, when it was funny when COVID happened, we thought, prices in diamonds dropped. And it actually did the exact opposite. People started buying online, and it was shocking. I mean, I would have personally said that we're going to see a downturn.
Right.
And it went the opposite way, where basically brick and mortar stores closed and everything went online.
Yeah, the reset.
Odd. Yeah, it was very odd.
Yeah.
When the numbers came out, there was a bit of a reaction to that. So, I don't know, risk-wise, I mean, the same as any junior. We've been able to access capital. We certainly don't need a tremendous influx. In fact, like I say, we're targeting profitability to be able to generate cash.
That's right.
In the short term, obviously there's a few things that we want to see happening. We'll add more equipment. We just paid off, we bought Caterpillar equipment 3 years ago, and that just, we just paid that off this month, and it's, probably, half-life, so we've got, good equipment there. We'll probably add to it as we do more tonnage.
Yeah.
A few more refinements to the plant, and then the big thing, the gensets and the BES system to gain advantage from the power system.
Yeah, so you don't have to deal with
and the drilling and bulk sampling is just sort of revamping or trying to establish how much do we really have in these outer areas. What's our guess here?
Let's talk about a few people that head off things for your company in South Africa at the management level.
Right. We have an awesome team. That is one of the keys. The chief operating officer over there is a gentleman by the name of Dr. Kurt Peterson. He's a PhD in mineral processing, probably been involved in most every major mine, ex-De Beers, a really, really solid, knowledgeable, educated person to run and develop operations and plant and everything else that goes along with that. George Stevens, guy works under him, geologist, big, a lot of experience in the Middle Orange, these types of deposits. With the drilling bulk sampling program, Dr. Tanya Marshall is going to be heading that up. She's the head of the South African Institute of Mining and Mineralogy. Probably one of the most, if not the most experienced, one of very much the most experienced people in the world with this type of deposit. Our directors, Stephen Haggerty, Dr. Haggerty is, between him and John Gurney and a few guys like that, there's probably no more famous people in the diamond business. Absolutely, worked on the lunar NASA program. So we've got some,
Big
really,
hitters.
yeah, we got some good people involved, and everybody's been there for, a long time. So everybody's focused on the same thing. We didn't, we look at it, we didn't think it was going to take this long to get it to this stage either.
Yeah.
So we sit there as shareholders with the same concerns, but everybody's focused on the end game and the bigger picture, and we all believe tremendously in the project. Right?
How do you communicate with those shareholders?
We do a lot. I mean, our shareholder base is not huge. Like I say, management and insiders are just about 40%. We have another grouping of 10 or 12 people that are all very large shareholders. So we communicate, and they're always looking for updates and things like that. We're not really that promotional. So
you don't put out news just for putting out
yeah, exactly. Most of our guys would look at it, if we put out a news release that was just fluff, they would probably say, why did you waste $500 or $1,000 doing that?
Yeah.
So marketing is tricky. We'll probably, we're kind of pushing a little harder on the marketing these days to get awareness up, because we do think that as this thing turns, the more eyes we get on it, which is just like we're doing here. It's to tell people the story, say, look, pay attention and watch this. I think it's, it'd be different if we were trading at $1, then it's the value proposition maybe isn't quite as great.
Right.
But, where we're sitting here now, we feel that's a pretty compelling story. And, I think it's time to get the word out while still, we've always kind of allocated our funds towards building the site and operations and growth rather than necessarily, marketing.
Right.
It's pretty easy to throw a couple $100,000 at marketing and move the stock.
Yeah.
But it's typically going to come right back down. And most of our guys are interested in the long term. They're interested in, cash flow and profitability and the potential for dividends or special dividends or whatever. And I mean, once we get this project going, I mean, we see this as the first of sort of the start of a number of these small mid-size, mid-tier, non-core assets and growing the company out. So this one, we feel like is going to be the one that's going to launch us, and then, from there, we're going to look to try and add a few more things in.
And you're not burning out at all? You're still passionate about what you're doing?
No, I actually love it. Like I say, I spend probably half my time in South Africa, at least, I would think, somewhere around there, off and on. And, a lot of time Dubai, we sell everything there. I get to come here and use our little shared place every once in a while. Not as much as I'd like, but it's certainly nice for the odd week to take it easy. It's a lot of time in New York, a lot of time in, throughout the US and in Europe even. So it's busy. I mean, it's a global business for us. Our shareholder base is global. So it's fun though.
Awesome. Well, even though you probably know a lot of your shareholders, we'll leave it here, unless there's anything that we haven't covered. What's one thing that you do to kind of decompress away from the company? Because you got to recharge the battery sometimes, right?
Jeez.
What's something you like to ski or?
I'm a terrible golfer. I used to live on a golf course and was a lot better then, but golf is one of those games that humbles you at the weirdest times. I don't mind that every once in a while. Love it when I'm in South Africa, do a little bit of flying. I've always loved airplanes and do that to sort of de-stress and take the edge off sometimes. And really that's about it. I mean, look, I travel a lot, I get to see a lot. The business is fun, the people are fun, everybody we deal with, we get along good, we're a good team. So overall, that's kind of our deal. We're pretty much focused and, most days there's never our day doesn't go Monday to Friday, that's for sure. It goes by months and years, and that's just the way it is.
It's challenging.
It's fun. We really enjoy it. So,
Anything we haven't covered?
I don't think so. I appreciate you taking the time, and I'm glad to hopefully your shareholder base understands and has learned a bit. And if they have any questions or whatever, just get a hold of me. I'm always happy to answer any questions you want.
Yeah, well, this is the first diamond company I've ever looked at and interviewed, and I think obviously, unfortunately, the stock has fallen off with most mining companies. That just means that there could be, much more explosive upside. That's not advice. We did cover some forward-looking statements today, so please remember to read the disclaimer that's at the beginning of the video. thank you very much for inviting
Pleasure.
me here today.
You bet.
It was absolutely, you said, Carl,
Nice to meet you.
we'll take care of it. Nice
Yeah.
to meet you too. And sometimes I go, all right, that makes me a little bit nervous, but you guys nailed it. Absolutely nailed it. And it's been a great interview. Thank you
No
very
worries.
much.
Cheers.
All right.